I'm Sarah Borkson-Keto here in San Francisco for REITworld 2018, NAREIT's annual conference. I'm joined today by Richard Stockton, President and CEO of Braemar Hotels and Resorts. Welcome, Richard.
Hi, good afternoon.
And as you look ahead to 2019, what are the key economic indicators you're looking at as you make investment decisions?
Yeah, there's probably three things that we look at closely. First, we track consumer confidence. That tends to be a precursor to strong economic demand. Consumer confidence right now is at an 18-year high, so that's very good for the lodging industry. We also look closely at GDP growth, which is highly correlated to RevPAR growth for our industry. And GDP growth has been trending nicely. The third quarter was up 3.5% on an annualized basis. The second quarter was up 4.2% on an annualized basis, and the trends are to continue that through 2019. And then lastly, we'll look at RevPAR growth, as it's happening historically, but also, how it's forecasted. And where we invest, which is in the luxury hotel segment, RevPAR growth has been higher than all other chain segments beginning in the fourth quarter 2014. So we've had 4 quarters in a row of very strong RevPAR growth for our segment for the types of hotels in which we're invested.
And looking ahead, what do you see the balance to be between organic growth and acquisitions?
So our portfolio has a number of great things that it's set up to achieve over the next year or so. And a lot of it's coming through organic growth. So we have certain investments that are in markets that a year ago were adversely impacted by natural disasters. We had hurricanes in the south. We had wildfires in Northern California. We have 4 properties in those 2 areas that are expected to benefit markedly over the next few quarters. Then we also have a number of asset management initiatives that will also deliver organic growth over the next year. We have 2 properties out of our 12 hotels that are being converted from Courtyard by Marriott to Autographs. That's expected to deliver increases in RevPAR, and ultimately in each case about a 20% unlevered IRR on those investments. So predominantly we're looking towards the organic growth coming from market improvement and asset management initiatives. That said, we keep our eye very close to the ground on acquisition opportunities, and we're seeing some things that are interesting, and we'll only really act if we find something that we can bring a particular angle to create some synergy and where we see value that other players maybe don't. So we're doing that as well.
And is there a particular asset in the portfolio that you feel exemplifies what the company really stands for today?
We're very excited about one of our recent acquisitions, which is the Ritz-Carlton in Sarasota, Florida. We closed on that earlier this year, and it's the quintessential luxury property. You've got a luxury downtown hotel, which was recently renovated, with a fantastic seafood restaurant. You've got a separate beach club property on Lido Key, which are fantastic, world-famous beaches. And then we have another parcel where we have an 18-hole Tom Fazio golf course, which is the ultimate golfing experience. So you go to a hotel like this, you've got the resort, you've got the luxury, you've got great food. It's a great experience for our guests, and we're really excited about that.
Richard, thank you so much for coming.
Thank you.
And for more on REITworld 2018, be sure to visit NAREIT's website, REIT.com.